Hi, thank you for joining us here at Tax Talk UK, where we talk about all things tax and cover other important aspects that you need to know about if you're working for yourself, running a small business. So today I'm going to talk about how to categorize paying liabilities in your MTD software. Before I talk about that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as being able to find other information that we have available for your situation, all aimed at supporting you in your self-employment and categorized through our playlist. And if you are finding a video useful and you like the content, please do take the time to give it a like, and that helps us to understand what people are finding helpful and which kind of topics we should concentrate more on answering the questions that keep on coming. On to then paying liabilities. So this can be a little bit confusing in your MTD software, knowing how to categorize the payments, because of course if you're paying a liability that already exists, it's not a purchase or an expense or an overhead that would affect your profit and loss. It is a balance sheet item. So of course, because it's a balance sheet item, in these liability accounts, if we think of them as holding or contra accounts, we have the liability in that category, and as we pay it off, it reduces that balance until ultimately it is at zero. So if you try to always think back to that principle of what we're trying to achieve, if you, for example, pay a liability for corporation tax, if you're a limited company, and then your liability expense, your liability category for the liability for corporation tax goes to a negative figure, then you think, okay, well, that shouldn't have happened, because that must mean that the liability wasn't held in the code in the first place. And in that instance, that would mean that you've correctly entered the payment, but that you just need to sort out the adding the liability, bringing it into the accounts in the first place. This is sort of loosely speaking what we're aiming to achieve. And on your balance sheet, you will generally, with the kind of accounts that you're the kind of liabilities that you're using the contra accounts for, you will need to every now and then reconcile that. And you'll remember that when we talk about reconciling, we're just looking for a way to check back to make sure that the balance is accurately shown in our accounts. So and often we're, for bank, for example, we're reconciling to a statement. With the liability accounts, we would be reconciling with the basis that fundamentally it should be a holding account, so the liability gets added to that category and then paid back out of it, and then it should be back down to zero. So we're reconciling against that principle, that at some point in time, at what point can we check that liability has come back down to zero. So it depends how frequently you're paying the liability as to how easy that is to do. So in that scenario of corporation tax, for example, that is an annual liability, and the payment would likely be made before the next liability would be introduced. So therefore it's really easy to see that it's gone down to zero. And even if you pay the liability after the next years has been introduced, if you look down the ongoing rolling balance of that, category, you will be able to clearly see it go that it's sort of the amount you've paid is the amount due, so that if the new liability hadn't have been introduced, it would have gone down to zero. And so then if you the more active the liability account is, then the more the sort of more work there is to actually be able to check. But it is important to be able to check that it is clearing off to zero, or would have been without the introduction of the new liability. And you can, whichever software you're using, if you look in the activity of the category, look back at the rolling balance, if you take off the new liabilities that have been introduced, you should find that you have the balance that you've paid, so that if you hadn't have introduced new liability, it would have gone back to zero. So I digress with that a little bit, sorry. It's just that it's really important for you to understand the concept of them being a holding account. So if ever you've got a negative balance in your liability accounts, then that is a sure sign that you need to look at something. There are eventualities where you could legitimately have a negative balance, but what it means is that you've paid more liability than you owe. So in a normal scheme of things, that wouldn't happen. With your taxes, you're generally aiming to have the liability, know the exact liability, and then pay that over to HMRC. So depending on whether you're completely keeping your accounts yourself, or perhaps if you have an advisor that helps you, perhaps someone that helps with your year end, and you carry out the transactions through the year, then introducing the liability may be something that you ask them for help with. If you have somebody that carries out your year-end accounts, for example, or either for corporation tax or for your personal tax return if you're a sole trader, then what you should be finding is that any adjustments that they make to your accounts, including the introduction of liabilities, they give you a journal, or even enter the journal for you these days in cloud-based software, which ultimately what that is doing is making sure that your balance sheet at the point the accounts were submitted, or the end of the period that they were submitted for, should I say, that your accounts match what was submitted. Because of course, as we explore in other information, at the end of each year, your profit and loss sets to zero at the start of a new financial period, but your balance sheet is an ongoing rolling balance. All the balances at the end of the year get rolled into the new year, but there may be times where some of those are adjusted by somebody who's carrying out the year end for you. For example, if you have any fixed assets, they would be adjusted for depreciation. If you are a limited company, the corporation tax liability would be adjusted for. So if you have somebody helping you, then do make sure that they are giving you a journal at the end of the year, or entering it into your accounts to make sure that your balance sheet accurately reflects the current position so far as possible. And if you are doing this yourself, then we do have some information on journals and what you would be using these for your adjustments. So ultimately, the thing to remember is when you're paying a liability, that is a balance sheet item. So you need to have the category that you choose to pay it from is the same as the liabilities held in, and if the liability isn't there, then you will need to introduce that by way of a journal. So hopefully that helps to explain. And as always, if it is a little bit complex and you're not really understanding what I'm talking about, then that would be a sign that it would be a good idea to engage some professional support to help you in what you are doing. And if you do decide to go down that avenue, then please do make sure that the person that you are engaging is fully qualified for what they are helping you with, is a member of a professional body, and do have a professional indemnity insurance. And so, as I mentioned earlier, please do take the time to subscribe to our YouTube channel and like the video if this has been helpful. Thank you. Goodbye.